Today, at an IDB press conference, the bank released a major new report conveying cautious optimism that Latin America and the Caribbean will remain resilient even if there's a slowdown in world economic growth.
What we are saying is that, as of now, growth for the rest of the year will be 3.6%, and that is a very good result in the context of an uncertain international climate.
The report outlines two potential economic risks the region could face in 2012: a faster than expected deceleration of China's economy and deepening economic problems in Europe. But despite the grim projections from across the Atlantic and the Pacific, the report states that the region can weather the storm clouds.
Even if Europe were to experience an economic shock, our studies show that Latin America would remain resilient.
The report identifies a set of policy tools developed by the IDB, which have proven to be effective during economic downturns.
Our study shows that the region's banks have improved steadily and across disciplines. Our banks have ample cash reserves and are adequately regulated by policymakers. We are therefore well insulated against economic shock.
In the post-Lehman environment, the bank remains cautious and optimistic in light of consistently positive economic indicators.
We are crafting temporary policies that cushion against the effects of negative shock.
The presence of a large number of European banks could make the region's banking sector vulnerable to a credit squeeze.
Banks that were purchasing Latin American financial assets are currently decentralizing.
Navigating financial storms in uncertain times was one of the key topics of discussion during the IDB's annual meeting. But the former president of the Central Bank of Brazil doesn't see reason to worry.
The Central European Bank has taken fortuitous steps to ensure the liquidity in European lending institutions. By minimizing financial risk for state governments, Europe has drastically reduced the chance of economic calamity.
Echoing his Brazilian colleague, the former president of the Chilean Central Bank is also optimistic that the region has laid a solid foundation that could lessen a possible contagion of the European crisis.
We certainly prosper from high demand for our products in foreign markets, but our success is also due to the region's solid financial systems, productive monetary policies, and fair exchange rates.
Sustained sound financial policy and practice will continue to propel the region's growth and development.